All right, guys, episode 4. So in this video, I'm going to be talking about why you should be trading futures and not consider anything else. Now, there's tons of different futures markets that you can trade, but I'm going to tell you why I trade NASDAQ. So of course, what NASDAQ futures actually are, it tracks the NASDAQ 100 index. Of course, everyone's heard of the huge tech companies like Apple, Microsoft, Nvidia. So you don't need to know a whole lot about that, but just understanding what you're actually trading is important. So you might have seen it before, but there's NQ and then there's M and Q. So NQ is the main indice. So this is E-mini NASDAQ and M and Q is the micro E-mini NASDAQ. So what this means is they're both exactly the same asset, but NQ is going to move $20 per point when M and Q moves $2 per point. So if you go down to the chart right here, if you look at this on the side, every time it moves up 1 point on M and Q, this is going to be $2, while on NQ, it's going to be $20 per point. So the reason why so many people trade M and Q is because it's 1/10 of the position size, as we said, so $20 versus $2. It lets you set your risk more accurately without having to worry about risking too much. For example, if you were to trade NQ and your stop loss was 100 points based off of the market conditions, that means that it'd be 100 times $20 per point, which means you're risking $2,000. And there's no way to risk any less than that because the minimum contract size is 1. Now on M and Q, if you were to do the exact same stop loss size of 100 points, it's going to be $200 if you were to risk just one micro contract because it's 2 times 100 points. So it just lets you fine tune your risk a little bit better. So now as you can see, these are the charts for both of them. So this is NQ and this is M and Q. For the most part, they're going to be moving pretty much the same. Some people prefer to do their executions on M and Q while charting on NQ because sometimes certain levels get taken on NQ, but they don't on M and Q. As a beginner, if you're starting out, just focus on M and Q, do all your executions and charting through there, just so you're not overcomplicating things. Because a lot of the time, people have multiple different monitors and they'll have NQ on one and then M and Q on another where they're executing, but that's going to be too complicated and confusing when you're first starting. So just focus on executing and charting on M and Q. That way you can manage your risk the best and focus on just the one chart. So since you're just starting out, you might have heard other people talking about Forex or trading stocks or trading options. Now I'm going to tell you why futures is so good. So one of the main reasons is because of market volume. Because futures are traded by a ton of major participants, these could be hedge funds, investment banks, pension funds. I have them all listed right here. The reason why this is so important is because it injects volume and volatility into futures markets. Because these participants have such large position sizes, there's going to be tons of liquidity in the market. Because NASDAQ has such a massive daily volume, there's going to be a constant flow of buyers and sellers. NASDAQ futures has hundreds of thousands to millions of contracts traded during certain days. For example, last Friday, there was 1 million contracts traded that day, which means that basically that's how many times one contract went from one hand to another. The reason why liquidity and volume is so important, let's say you buy one contract at a certain price, it's going to fill you either higher or lower depending on what the actual spread is. In futures markets, it's much better because there's way more market participants, so it can match one buy order with a sell order a lot quicker and more efficiently. So 3 of the main sessions that you're going to see for people that trade NASDAQ futures is going to be the New York session, the London session, and the Asia session. So these are going to be times of the day that have an increased amount of volume because those stock exchanges are being traded at the same time. So that's going to be, for example, the New York Stock Exchange that opens at 9:30. All of those stocks are going to be traded at the same time, which injects additional volatility into futures markets as well. So now I'm not going to go into too much detail on how margin works in futures contracts because a lot of new traders just trade prop firms anyways, but it's something you'd want to look into in the future if you do open a live account. If you've ever looked into trading stocks and stuff, there's usually like some sort of pattern day trader rule where you have to have a minimum amount in your account, which is like $25,000 or something, because you need to have the available margin for leveraged accounts. But in futures, you don't need that. You just need the minimum required margin for the contract. Now, another huge benefit to futures is that it's open almost 24 hours. So basically what that means is no matter what your schedule is, you're always going to be able to find some sort of session that you can trade. So if you work a full-time job as well, futures, you're going to have the New York session, which is 9:30 to 4. And then you're going to have the Asia session, which starts at 8. And then there's also the London session, which is like 2 a.m. So there's always going to be a time that you can trade because it's only closed between 5 and 6 o'clock at night, and then it reopens. And then it's closed on Saturday and it's closed on Sunday, but opens at 6 p.m. on Sunday night. So it's almost open 24 hours when compared to trading stocks that you're just going to be trading the New York Stock Exchange. So now the last and one of the most important reasons why I trade futures is because of how strong the prop firm industry is. So when you're first starting out, you're going to be most likely wanting to use prop firms because of the additional leverage that it allows you to trade. If you don't know much about prop firms yet, you can look it up, but basically they're going to be funding you with capital, so you don't have to risk your own capital on trades. So you put down a little bit to buy the evaluation. If you pass the evaluation, then you can trade with their capital. The reason why this is so good in the future space is because we have firms like Top Step that have been around for like 14 years and at lots of other reputable prop firms as well. There's a lot of Forex prop firms that aren't as reliable because usually they're CFD, which means that they're not traded on a central exchange, so it's not as regulated. And it also has lots of prop firms that are reliable and have been around for a long time. So these are just a few of the prop firms, but Top Step, Alpha, and Lucid, these are some of the best ones that you can trade. If you want to look up a list of prop firms, there's tons of different websites that you can do that. These are some of the main ones that I use in the future space. All right, guys, so that was just a really quick breakdown of why I trade futures and some of the benefits of doing so and why you should seriously consider trading futures if you've looked at trading other things like options or Forex. If you guys want to stay updated on what I'm posting and also have access to all the other education, you can join my free Discord. There's a link in the description below. You'll also have access to my free Notion trading journal template. It's super useful when you're getting started because it allows you to break down all of your trades in one area to see what you need to improve on. And I also have my full displacement model checklist in there if you want to kind of jump ahead and to see where the whole bootcamp is going to be leading you. But yeah, you can check it out in the link below. We'll see you in the next one, guys.